everyone. I want to thank you again for joining us for another amazing Money Monday. As usual, we have another great speaker who is lined up. It definitely near and dear to my heart. One big thing we always talk about is finding out your path, really being able to understand where you want to go, how to make good decisions for you, really understanding some fundamentals, how to find your numbers, how to figure out what's next, and really how to take control of your life. We're in the midst of the pandemic. We are pros at it at this point because we've been experiencing this pandemic and all that comes with it for the past 9, 10 months, depending on where you actually are in your locality. So I want to tell you a little bit about our speaker today. It really kind of rings true to a number of people's story as you talk about your FIRE movement, retiring early, maybe just simply taking a break. So we have Charlene Rhinehart, who is a CPA, best-selling author, and investing writer who took a 5-year sabbatical to travel around the world and live her dreams. Who doesn't want to do that? She is a best-selling author of Dividends Are a Queen's Best Friend. Be sure to look that up. And Debt-Free Before Graduation. Charlene's investing, and money insights can be seen in publications all over the web, including Yahoo Finance, NASDAQ, The Motley Fool, Black Enterprise, MSN, and Essence Magazine. She's going to help us explore how to build a stock portfolio and use those dividends to create the life and freedom that you desire. So without further ado, passing the mic on over to Charlene.
Hi, everybody. I'm so excited to be here with you. It is an honor to really speak to people who understand the journey, who really are excited about their future and creating a life that they want. So many times we let fear get in the way of what we want. That was me, and I just did not want that to be my story anymore. So I took a 5-year sabbatical, just like Rosalind said, and decided to pursue what was in my heart because, hey, who knows when our expiration date will be. So thank you, Rosalind, for having me on.
Now, what was kind of your break point when you said, yep, I got to go? Like, I got to clock out of here. I got to move on to something different.
So it was an interesting story because I always, once I stepped foot on the corporate soil, I still had this dream of being a speaker, writer, just doing something beyond the cubicle. And I remember my first day on the job, one of my coworkers told me that the man who was sitting in my seat had just retired and he died a week after he retired. I was like, oh no, that is not going to be me sitting in that seat for 50 or for 40 years and then dying and not being able to live my life. So I always knew that I wanted to find a way to exit. I just didn't know how. I didn't think it was possible. I remember a friend, she left her job to pursue her PhD. And I was like, man, I want to be able to leave my job one day. How did you do it? She was like, Charlene, let me just tell you one secret that will help you in your life. Just do it. I was like, oh my God, that's groundbreaking advice. Just do it. So when it came to my time, I was in corporate for maybe 6.5. No, I was in corporate a total of 10 years, but I was at my company for 6.5, 7 years. And I had just won the Miss Corporate America 2015 pageant. Now I had been working for 5 years to win a pageant, and I got rejected for 4 straight years. And so I finally won, and I was like, wow. Maybe this is my chance to live that life that I've always wanted to live. Now, I wasn't thinking about finances until afterwards, but I was really thinking about, okay, I need to go out there and live my dreams because I got the certifications, I did the groundwork. If I can survive corporate America, I'm sure I'll be okay after corporate America. And so once I won that pageant, I told my job about it, and they were like, oh, how are you going to do both? And I was like, it's the same thing I've always been doing. I've always been giving back to my community and speaking. I just have a crown now to do it with. And my boss said, how are you going to survive? I couldn't believe that she even asked me that question, but I realized that she tried to hit me with the fears that most people have, and that's survival. And I just thought to myself, I don't care if I fail. I'm willing to fail or risk failure in order to succeed. I'm willing to fail in order to live the life that I want, because I could die in 2 years. I'm willing to learn whatever it takes. I'm willing to invest in myself in order to make this happen. And so I did it. On April 15th, tax day, 2015, I left my job.
Now, because you said, at that point in time, you didn't necessarily know how you would make it all work. When you think maybe the first 30, 60, 90 days after turning in your resignation, what are probably the biggest fears and maybe some of the biggest steps that you were like, okay, I got to do this, this, and this?
Whoa. So in my first 60 days, it was probably a nightmare. I got into an accident, had to have teeth pulled. Everything that could have happened in that 60 days. I was like, whoa. I had to get COBRA insurance. And that's like $600 and some dollars a month. So my money that I saved for a year ran out in like 2 months. 2 months, because of all the expenses that came my way. And so I'm like, oh my God, I need to go back to corporate America. I can't do this. But when you are committed to a goal and you set your mind on something, you'll attract people into your life who will help you go in that direction. So I started telling people my goals, like, I really want to speak. I really want to publish books. I really want to do this. And somebody started recommending books and really encouraging me on this journey to just keep doing it, keep hanging in there. So I just started attracting a lot of different people who were willing to help me go on this journey and keep going, because I was a hot mess to begin with. I'll be completely honest.
So when you think back and you're like, okay, goodness, that was a horrible first 60, 90 days. Are there things that if you could rewind the clock and do it all over again, are you thinking there are things that maybe you could have put in place or did more of or read or what have you, just to make you better prepared?
Definitely. So this is what I did. I positioned myself to have multiple sources of earned income. So I applied and studied for every certification. I was trying to get more education. We always think, oh, the more education we get, the better we will be in life. So I became a certified public accountant, a certified fraud examiner, a project management professional, a Zumba instructor. I just kept loading up certifications. But what I should have been loading up on was passive income. I should have been thinking about passive income that would sustain me until I found the direction that I wanted to go in. I wanted to take this sabbatical, but I didn't expect those unexpected things to happen. So I should have had passive income that would keep me afloat, and not just a savings, because a savings can deplete within months. You need income. You need a passive stream of income that doesn't require you to lift a finger. So I would have been thinking more strategically about that.
I think that's huge. Oftentimes we're like, can I save more? But not necessarily, you don't necessarily need as much in savings if you have that passive income, because you won't need to draw from your savings as much. Now, because you had that experience a number of years ago, as you think about some of the avenues that you're using or have used over the past few years in terms of passive income, can you tell us a little bit about what some of those things are?
Yeah, so my main two sources of passive income are dividends and writing books. So I wrote Dividends Are a Queen's Best Friend. It combines both of my main sources of passive income. But I wrote Dividends Are a Queen's Best Friend because I realized when I was earning those certifications and getting educated, I had to go through a gatekeeper in order to be accepted. I had to be who they wanted me to be in order to get the position that I wanted. But with dividends don't discriminate. As long as you build your portfolio, as long as you contribute consistently and set dollar goals every month or every year, the money will come in. There's no limitation to how many dividends you can get. As long as the board of directors declares those dividends, hey, that deposit is going into your account. So I liked that freedom that came with the fact that, hey, I don't have to be anybody else. I don't have to do anything else. I'm tired of working hard for pennies or for somebody else to value who I am and what I bring to the table, or to act like something I'm not. And so dividends, hey, it doesn't matter if I'm blue, black, orange, green, black, doesn't matter. I still get my dividends and I didn't have to wake up. So I love the dividends piece of it. passive income, I used my gift. I loved writing. I always loved writing, and I wanted to be able to share insights with a larger group of people. And that's when I realized writing a book would just help me and other people, most likely help more people. And that was my goal. And so right now I'm on a journey to write a book a month. So last month I wrote How to Find Happiness Again, and it was a #1 new release. This month I released Debt-Free Graduation. I teach people the strategies I use to pay off my student loan debt at 22. So that really helped to position me for other things in life. And so I'm like, no, more people need to know about this. You don't have to take out loans.
You're going to have to give us some of those tips. You got to give us a couple sneak peeks into the book. I'm sure a lot of people are sitting with student loans today trying to figure out, how do I get rid of these things? How do I make them more manageable? Thankfully enough, people have gotten a bit of reprieve with CARES and so forth. But what are maybe 1 or 2 tips from the book?
Yeah, so my book is for individuals 12 to 19. So you want to really be thinking about this early. So one tip that I don't believe anybody really told me about or was thinking about when I was going through the process was, do you really need to take out that student loan? Is there an alternative way? Because, I think they give you the, the subsidized and unsubsidized loans as part of a financial aid package. Do you have to take it, or are there alternative ways? Can you work to accumulate that money? Can you get an internship for the summer that will take care of some of that stuff? What are things you can do? Do you have to take out that amount every single quarter? Even if you have to take it out your freshman and sophomore year, do you have to take it out your junior and senior year? You've probably had internship opportunities. You have more skills. You can command more dollars. So you do not have to take out those loans. So I never got a refund check in college. Don't even know what a refund check looks like. So I would tell people, like, don't get those refund checks. Build your skills so that you can be more attractive to donors, internships, and fellowships, other opportunities that are out there for you. Think of alternative ways. Just because everybody is taking a loan, just because it's the norm, doesn't mean you have to do it. And I started with zero. So I'm a first-generation college student, had zero, had pennies, and I didn't receive any scholarships to go to college. Most people, they receive scholarships for the college they want to go to. I didn't receive any college scholarships. So I was really like on the end of like, okay, what am I going to do? But everybody has something unique about them. It could be something simple, but once you find that unique thing about you, that will help you pave the way for other opportunities. Me, I wasn't good at athletics. I wasn't the best academically. I wasn't the best musically, but I did a lot of community service. I was always willing to help. And that's what helped me to network, get internships, and get scholarships. It's something as simple as helping other people.
Oh, see, that's huge. And then, of course, ladies, she said the book is for ages 12 to 19. So if you have kids, make sure that you purchase the book. I know you were holding up one of them a minute ago, but make sure you look into it. And definitely the information for the book is in the event as well. But I know a lot of ladies are like, well, on the dividend side, what if they don't know a lot in terms of the day-to-day watching the market, stock picks, and so forth? What are some tips you can give the ladies if they're kind of maybe just getting started and don't have a lot of investment knowledge?
Great question. So I always recommend going to a wealth manager, financial advisor as well. But before you go to them, you want to know the right questions to ask. You want to know what they are doing for your portfolio, and you want to know if they are the best person for you. So in my book, Dividends Are a Queen's Best Friend, I break it down in simplest terms. I make shopping at the stock market as simple as shopping at the mall. So your daughter would really like this book because it's like, it really breaks it down in a way that hasn't been broken down before. So it's very basic. I show you how to open up your brokerage account. I show you that, hey, you can buy stuff on Amazon. You can also open up a brokerage account and buy stuff, buy dividend paying stocks. You just need to know a strategy. You don't just want to go out there, open an account, ask somebody, hey, what are the best stocks to invest in? Don't do that. Don't do that, because that person doesn't know you. They don't know your mama. They don't know your goals. So don't ask somebody who doesn't know anything about you what the best step for you to take. That's why financial advisors, financial coaches, and wealth managers are great for you. But this book will really break down the simple, basic information that you need to be thinking about before you dive in, because you want to maximize your success and create an extra stream of income for a lifetime that funds your lifestyle. You want to build a strategy and not just think about, oh, what's the best stocks that I should invest in with $1,000 today?
And definitely, I know a lot of people, and various people have different investment strategies. There's no way to give you just a blanket, this is what you should be doing. But if you want to day trade, that's one thing. If you want to be more of a passive investor, which is what you're describing, so you're putting in a little bit of work on the front end, and then you're watching those dividends come in. Now, you mentioned kind of having that relationship, having some advisor that you're going to work with. What are some of the questions that they should either ask that advisor, or information that they should make sure that they're taking to that advisor as they're having those preliminary conversations?
Yeah, so you should know what your goals are, because when you meet with an advisor, the advisor will ask you, hey, what are your goals? So you want to be clear and honest with your advisor. You want to start thinking about that. I always tell people, before you invest in anything, you want to invest in you first. You want to understand you inside and out so that you can know what works best for you. So start investing in you first. 2, learn the basics so that you can have questions to ask. So your wealth advisor or financial advisor might want to know your time horizon. They might want to know, hey, when do you want to retire? Start thinking about these things now so that you can have that information available to somebody else. And don't think that you have to settle for the standard retirement age. You don't. You can say, hey, I want to retire in 10 years or 20 years. You can say, I want to retire at 40, 50, 60. So you have to customize your goals to fit your lifestyle. Don't just go to your financial advisor with things that sound good. Be real with your financial advisor so that your financial advisor can be real with you and create a portfolio that matches your goals. That's exactly what you want. And 3, I always tell people that they forget about this piece of the equation, and it can be very beneficial. The tax piece of it. This is like one of my main pieces of the equation. That's why I love dividends, because with dividends, you can pay 0 taxes and make some money while somebody is working very hard, working 80 hours a week, or getting up at 8 a.m. or 5 a.m. in the morning, and they're paying all these taxes, but you can be at home collecting dividend payments and pay no taxes, just living your best life. So you want to look at things from all angles. You want to look at things from different accounts. You don't just want to rely on your 401k, 403b, 457, all of those employer-sponsored plans. You want to be able to leverage plans that work for the lifestyle you want now and the one you're seeking to have later.
Now, when you're thinking about these dividend producing stocks, are there, because some people are just going to be kind of chasing the dividends. So they're going to say, what pays the most in terms of dividends? Is there something they should be thinking of from maybe a risk tolerance perspective, or how do they calculate or anticipate how much they'll be able to derive in dividends off of a certain portfolio?
Yeah, so I do a lot of investing in individual stocks, and I know a lot of people are like, no, it's too much risk involved. But if you're willing to do the research, read those financial statements, join the earnings calls, and take the time out to do that, then it's possible. If not, you hire somebody else who can do the work for you and create that they can manage your portfolio management, that's what it's called, and put the right diversity of assets into your portfolio to meet your needs. But I focus on individual stocks, and I have a newsletter called the Dividend Investor. So that's what I do. I share stock updates, dividend updates with the tax information, because I want you to know, hey, how can you be tax efficient with this? But how can you take advantage of a stock that probably has been beaten down and has the potential to grow plus give you dividends? And this year has been absolutely amazing because, hey, the stock market reached record highs. Dow Jones reached record highs, S&P 500 record highs. So this was an excellent time to really invest and use the resources. So the dividend investor has been really good for people who wanted to figure out, hey, what should I invest in? How should I do it? Because people live off their dividends. And so you want to think about the risk associated with different types of stocks like REITs. REITs are going to give you dividends, but what happens when real estate tanks, or how does the environment around you impact those dividends? And why are they giving you such juicy dividends? You know what I'm saying? Why? Because a REIT is required to pay out 90% of their income to shareholders in the form of dividends. So you want to be thinking holistically about the company. Don't just jump because you see a 10% dividend yield. 10% dividend yield is very high. That could mean that the company is not reinvesting as much within the company. They're giving out more of their money to shareholders in the form of dividends. So they're not reinvesting that money, which could mean, okay, can they potentially grow? Are they going to be able to keep growing at a steady rate? Or are they a dividend aristocrat? Have they been paying dividends for years? And do I want that safety feature locked into my portfolio? So you want to think about your age. It's going to be different based on your age, your risk tolerance, and how much you want. What I do every year is I track my monthly dividend payments in various accounts because I want to reach certain goals. So I want to be able to have dividend payments coming in from January through December. So I look at stocks in that range that I like. I time my stocks based on that. Now I'm looking at, ooh, I need some more January income. My January income is light compared to my December income. So what do I need to invest in before the ex-dividend date so I can get that money in January flowing in? So you can time your money and decide how much money you get.
Now tell us a little bit about that ex-dividend date. I know some people were like, what? What is that?
It's not the date you broke up with your ex. No. It's the date that you have to buy the stocks in order to qualify for the dividends. So if the ex-dividend date is today for a company, you have to buy stocks before that day in order to qualify for the next round of dividends that will be paid out.
Now, Tiffany asks, can you tell a little bit? I know you talked about in your book how to set up your brokerage accounts and so forth. Do you have some experience with Acorns or Robinhood? I know both of those are pretty popular today.
I do. So Acorns and Robinhood are two different type of ways to invest. So Acorns allows you to invest in ETFs. They take all the hard work out for you, but you can't select your Tesla and Apple, whatever you want. They choose a portfolio for you of ETFs based on your risk profile, based on what you selected when you signed up for the account. But it is awesome that, hey, they're saving your spare change. So if you want to have your change go towards an ETF portfolio, an exchange traded fund, awesome. If you want to have more control over your portfolio, more flexibility in what you invest in, what's in your investment bucket, then you can do Robinhood. A lot of people love Robinhood. The interface is just amazing. Very user friendly. It's like playing a video game. You have to watch out because it's like playing a video game. It's so easy to just hit buy and sell. So you can be on there just trading. And trading is a different world. I'm not a trader because it takes a different mentality. Hey, you can trade and invest, no problem. But you have to understand the implications of what you're doing and how it can impact you long term. I love that investing lowers your taxes because you have tax harvesting losses, like tax loss harvesting, which is a concept that, hey, I had a bad year. Now I'm going to use these losses that I took to offset my gains, which is awesome because if you decrease the amount of gains you have, guess what? You decrease the amount of taxes you pay. So that's awesome. So it's so many different ways to look at that and look at Robinhood. But Robinhood, you can invest in your individual stocks, Acorns, more ETFs. So it's up to you. Do I want to do both? You can do both. Nobody said you have to choose one. You can invest in Robinhood, build your portfolio, get your dividends, or trade with whichever one you want, or do Acorns and have somebody else manage your portfolio, create the portfolio for you through an ETF.
Now, you talked a little bit about on the dividend side, the ability to kind of set it and forget it. Now, how much time? Because I know there are some people and they're like, oh, I'm going to be day traders. And there are some people that want to trade in options. So it's a lot more active. And there are some people that are like, no, I don't want to do any of that. I love the concept of something that's a lot more passive. When you think about the dividend investing the way that you're doing it today, what is the estimated maybe time commitment on a weekly basis?
A weekly basis. Ooh. So unless I'm like, I don't really have to do anything unless I have specific goals. So right now, I know I want more money for January. So I am committing tomorrow to do that, to buying certain investments. I just care. The stock price is okay, but I care about the dividends. I care about the recurring stream of income. There's this saying that profit is transient, income is forever, which means that the profit can come and go, but that income that comes in can be forever. So if I invest in Apple today, if I just bought one stock, guess what? I'm getting that Apple dividend for life, as long as Apple declares it, for life. I don't have to look at my portfolio or look at Apple. I just look at my dividend coming in to my pocket. And so that's why I want to make this easier for others, because I'm not really managing my portfolio like that. I'm always looking for other opportunities because of the dividend investor. I want other people to have other opportunities. Some people are like, I can't afford a $2,000, well, Tesla doesn't have dividends, but I can't afford a $120 Apple stock. How can I get a dividend that I can afford? Okay, let me show you options that are less than $10 so you can get started, so you can start seeing income coming in your account, and then you can graduate to other levels. But once you see that dividend coming in your account, you're going to be like, oh, I can do this. I'm going to put those bag of chips away and give me a dividend paying stock.
Now, Aaron asks, can we get the information for the dividend newsletter that you mentioned? So how do people sign up for that?
Yeah, so it's on wealthywomendaily.com. It's called the Dividend Investor, INVESTHER. It's a monthly subscription. You can either subscribe monthly or yearly to get those monthly dividend picks, or yearly. And that's on, wealthywomendaily.com. Go to premium, or just type in Dividend Queens into the internet and type in the Dividend Investor. It should come up, the Dividend Investor.
Good stuff. You're going to have some people looking up that newsletter, because
Yes.
there's definitely people who want to do the search on their own. And if they're doing the search on their own, what are some key things that they should be looking at when they're looking for the stocks? I know everybody is like, oh my God, I hear about the same few names every single day, but there are definitely ones that people don't hear about every single day. I remember I used to work for a financial institution, and like you said, we had people who lived on those dividends, and it was their monthly, quarterly income. And so, of course, it wasn't the Apples of the world. And even in 2008, they continued to pay a dividend, which was a very big deal. And so in terms of some of the maybe basics or fundamentals that they should be looking for when they're like, okay, let me put together this portfolio, what are some of those fundamentals that they should be looking for?
Yeah, so if you're looking for known stocks that people are talking about, then right now, so a big thing for the last 2 years is, how has this company performed during a recession? So you typically look at what has happened in 2008, 2009 to see what would happen. But this pandemic has not been like your typical cycle. But typically, that's what you would do. You would compare. You have to have some type of benchmark. How has it done then? And how could it potentially do then? You want to look at revenue. Is the company consistently growing in revenue? If not, what's holding the company back? Look at growth initiatives. What is the company doing to grow? Are they acquiring new companies? Or is there a new initiative? What is this company doing? And do they have an economic moat? That's big for me. I want a company that is going to be so dominant that it's going to be hard for another company to come in. Economic moat is like, I own this space. You know, this company owns this space, and the barriers to entry might be high so that others can't get in that space. So those are 4 things that you can look at when exploring. I always say, read the financial statements so that you can find the hidden goodies that they probably don't tell you. Look at those notes of the financial statements. Look, reading financial statement is like the secret sauce to what a company plans to do. And listening to those earnings calls every quarter you can hear things that you probably won't see on the financial statement. You can hear the type of, maybe a CEO might be cringing when he talks about some things, or maybe he's trying to stay away from certain topics that could present a red flag. I think hearing something can just provide more transparency than just reading the numbers. So I typically say do both, and then go to conferences. So Morningstar has a conference. Well, all conferences are probably virtual now, but Morningstar had a in-person conference where they would have all of these companies coming together. Or if you were into REITs, I used to go to the REIT World Conference. That was amazing because all the CEOs of the REITs would be there, and they would be trying to strike deals or talk about their specific REITs and growth opportunities. So being able to be in a space with these individuals is amazing. You're going to get stuff that you're not going to be able to research online.
Now let's go a little bit more into REITs. I know we've touched on it, but I'm not sure if everyone's familiar in terms of exactly what they are, what they mean, kind of how they differ from just an average mutual fund or a stock that they might see in their 401k or what have you. Can you dive a little bit deeper in terms of what REITs are?
Yeah, so like you can describe REITs as a portfolio of commercial properties, a basket, just like a basket of ETFs, but it's a basket of commercial properties, such as in the hotel space, data centers, so many different REITs, hotels, data centers, oh my gosh, healthcare facilities. There's just a list of different REITs out there. And the REIT, the Real Estate Investment Trust, they package all of these different companies up and they sell it to investors on the stock market. So it's traded on the stock market. You can have direct access to it like an ETF. And so when the REIT obtains these income, the rental income from the properties, guess what? You get a piece of the pie in the form of dividends. And so I said earlier that REITs, they don't have to pay any corporate taxes, but because of that, they are required to follow certain rules. One of those rules, it's 90% of their income has to go to investors in the form of dividends. So that's why their dividend payouts, their dividend yields are much higher than your typical standard stocks because of legislation that was passed.
Now, I think that's a good segue when we talk about, I think oftentimes people are like, oh, just invest. I made this much money and all that. Are there downsides? Are there risks involved to a dividend strategy as you're putting that together? Of course, perhaps, just the simple risk that they don't pay out a dividend. But are there any other downsides or risks that people should be aware of and thinking and taking into consideration as well?
Yeah, you are absolutely right. We saw that this year, right? That a lot of companies suspended their dividends because they wanted to conserve they want to preserve capital, so they were not giving out dividends. So that's the risk that you're taking on, that they suspend the dividends or they don't pay the dividends. The board of directors doesn't declare a dividend. And so that's why I always say, look at dividend paying stocks that have been around for a while because they have a record of paying dividends. You have your dividend aristocrats, your dividend kings, if you're looking for some safety and comfort in your portfolio, but then those are older stocks. And so some people are wondering, hey, can these stocks keep up with the technical demands of where the world is going? So you want to take that into consideration. But hey, companies have been paying dividends for centuries. Before the 1900s, companies were paying dividends. And so I feel that it's a steady, reliable source of income that you can depend on. Even if company A does not pay dividends, you still have company B, C, and D in your portfolio because you've created a diverse portfolio. REITs may have stopped paying dividends for one quarter, but you know that, hey, they have to pay dividends sometime that year in order to maintain their status as a REIT. So I'll get it sometime. I may not get it this quarter, but it's coming sometime. And then just like companies just took a beat down. So you want to have that diverse portfolio of companies in different sectors. So there are about 11 sectors of the stock market. I always think about how do I want to diversify based on the different sectors of the stock market.
Now, you talked a little bit about tax loss harvesting, so a great way to reduce your tax liability. But of course, any type of income has some type of tax consequence. So let's say they didn't have anything to offset. In terms of tax planning, if they're living off of these dividends, what are they planning for from a tax perspective?
Good question, because hey, you can, if you're single and your yearly income amount that you need to survive at 60 and 70 is $35,000 a year, you won't have to pay taxes if that's all your income, just that dividend income. You won't have to pay taxes on dividends. Why? Because of long-term capital gains rates. Now, typically when we work a job, our income is split into 7 different tax brackets, right? The more money we make, the higher the tax bracket, the more money they take. We've all heard that. But when you are in the investing world, you play a completely different game. If you invest for longer than a year is that special date. If you invest for longer than a year, you qualify for long-term capital gains rates. The standard long-term capital gains rates are 0%, 15%, or 20%. Most Americans fall into the 15% category. But if you only earn $35,000 a year in dividend income, and that's all your income, no taxes. You might get some Social Security income too. And if it doesn't exceed that amount required, no taxes. But if you are married, the benefits are even sweeter. It's double that amount. So hey, a married couple can make $70,000 and pay no taxes because of knowing the tax laws. That's pretty amazing. So a lot of people don't realize that the more money they make, you could be putting yourself in a position where you're making a lot, but you still have to pay the IRS a lot. So how much are you really profiting from your investment? So when people ask me, oh, should I sell this stock? What's your long-term goals? How much money did you make this year? Is the stock good? Like if the stock isn't bad, if it's a high quality stock and they just want to sell the stock and make some money, think about the tax consequences of it and how this will impact your portfolio for the year.
That's a great comment that you made, because what if they're holding some stock and the value of the stock is going down, but yet they're still paying out a dividend? Which one should they pay more attention to versus the other?
So if the company is going down and has no potential, I always say, never stay with the stock that's lost its potential. Just like you never stay with a man that's lost his potential. Don't stay with the stock that has no future potential. We are not dating for potential. We are dating we are not dating or investing based on potential. We see the numbers. We see the opportunities there. So if the stock has lost its sparkle, there are more opportunities. You don't have to stay with the stock that's going down. Like there are so many more opportunities. And that was one of the mistakes I made when I first started investing. I stayed with the stock, even though it just kept going down. I was like, well, maybe it will go up in 2 years or 3 years. I didn't look at the financial statements. I didn't listen to the CEOs. Wasn't on the earnings call. I just had a hunch that maybe it would go up in 2 years. I was not basing it on any data, because I was just so excited to be investing, and I wanted to be one of those people who struck big in the stock market because the stock went down, everybody else ignored it, and it went up. And no, that didn't happen. And I had to break up with that stock. Once I broke up with that stock, I was like, no, that is not the investing strategy for me. I need to change my mentality. I need to look at dividends. It wasn't a dividend paying stock. I was just with the stock that it decreased in value, and I was hoping that it would recover. But that's when I realized, no, I need a steady source of income to compensate me for the risk that I'm taking on for investing in the stock market. And that's why I love the idea of dividends, because I don't want to be up all night thinking about, oh man, can this stock go up or down? What can I do? I wanted to be compensated in some way while the markets worked itself out, while the company increased. I want to be compensated with the dividend. I don't want just profits. I want that recurring stream of income.
Now, when people are building up their portfolio, so they're starting from zero today and they pick $1,000 worth of dividend paying stocks, should they do dividend reinvesting, or should they take those dividends if today they don't need the income? So they're planning for 5 years away, 10 years away, whatever that might be.
Dividend reinvesting drips. Ooh. So everybody says compound interest is sexy. Yes, it is. And I know you always want to be on the end of the puzzle where you're receiving compound interest, because the other side is you're paying the punishment of compound interest, and student loans can be one of those punishments of compound interest, or credit card. So you always want to be on the other side, and drips allow you to be on the other side when it comes to dividends. You reinvest in your dividends. Now you can get more shares of the stock automatically without you lifting a finger. You don't even have to look at your stocks every day and try to time the market to see when you go in. It's going to automatically buy it for you, which is awesome. You're going to get fractional shares based on the amount that you have in your account. So that's pretty awesome. So I tell people, like, yeah, have a long-term strategy. If there's a way, like, you don't need the money now, especially if it's in a, depending on what your account is, because I do have different strategies in different accounts. There are some stocks I don't take the drip on. I'll be honest, but in my Roth and all my other accounts, not in my Roth, but in my other accounts, my taxable brokerage accounts, I do try to do drips on most of my investments.
Now, when you talk about kind of that dividend reinvesting, are there tax consequences to that? Because of course, today, if you're creating that portfolio, you may actually still be working your 9 to 5, kind of looking at the light, the end of the tunnel, and you're like, all right, I'm gonna put this portfolio together. I'm still making X number of dollars per year. Is taking that dividend and reinvesting it, do they have to pay taxes on that portion?
So the company will give you a statement at the end of the year with the dividends that you receive. So no matter what you do with it, the dividends you receive, you will have to pay something on it if it's not in a regular retirement account. So in the Roth IRA, you get dividends. The Roth IRA company is not going to send you anything. But in another account, like your TD Ameritrade, the taxable brokerage account, that's non-retirement, yes, you will receive a statement at the end of the year with any dividends that you received.
Now, are there any platforms that you have a preference towards versus others? I know we talked about Acorn, we talked about Robinhood. I know some people have different affinities for different platforms. Is there a platform that you think works better in this scenario?
For drips, for which specific strategy?
Just for dividend investing, maybe just to get the information on the stocks and so forth.
That's a good question. I'm most familiar with, I feel that they all have different features for different levels. So I always used to tell people, hey, go to Robinhood if you have no idea how it works, because if you look at TD Ameritrade or Fidelity, that big screen with all of those charts and numbers may be confusing to start off. It may be a bit intimidating. So if you want something simple where you just buy, sell, Robinhood, it can be your go-to. But I love the research that other platforms provide. I love the research and analysis that TD Ameritrade, Fidelity, and other platforms provide. They're a bigger platform. They've been around longer. It's just not for buying and selling. There's just so many other things that you can do. And they have a customer service center, which is amazing, that you can actually contact somebody and ask them questions if you have no idea how to navigate your account.
That's huge.
Yes.
You also talked about, okay, listen to the quarterly calls, we're reading the quarterly financials and so forth. And so with all that kind of due diligence that one should do in order to make good, educated decisions, how many stocks would you think are like a good number? So you probably wouldn't want 100 different individual companies, because that's 100 times however many hours it takes you to do that research. What's a good maybe sweet spot in terms of number of individual different companies that you should have?
Yeah, it definitely depends on what you can manage. because I love diversity. I love diversity in things that I know. So I'm not going to diversify in the area that I know nothing about. I don't feel like that's true diversity. I feel like diversity in areas I know. I feel like you should buy what you know. So I look at those sectors. There are 11 sectors. I like to get like 2 or 3 stocks in the sectors that I like and that I follow. Or if hey, tech is big and I want some fast growth to add on to my dividend portfolio. Maybe you want to add more tech stocks, because what I really like about accounts like the Roth IRA is that you can do some trading, some mini trading. You can, you put your 6,000 annual contribution in, right? And let's say you bought all Tesla stock. I wouldn't recommend buying all of one stock, but you bought all Tesla stock in March, and you bought Tesla stock for maybe $400 when it dipped, and then it went to $2,000, or let's say $1,900, and you have a $1,500 gain per share, and you had over 10 shares. You can actually, so you made thousands of dollars on that one transaction. You only put in 6,000, but you could have I haven't did the calculation, but I know you could have potentially made over $20,000 on that. You can sell your entire portfolio if you want. You don't have to, no consequences, no questions asked. You can sell your entire portfolio and now you can diversify. But because you knew Tesla was a great pick right then, hey, I got my Tesla, but now I can diversify out into other areas because I have more capital to build with various other stocks that I want.
Now, what are going to be, you mentioned Tesla, you mentioned Apple. I think oftentimes people are like, that's the hot thing, throw all my money there. What are some of the mistakes that people often make as they're choosing and doing their stock selection?
They choose what everybody else is choosing. That's number one. So I remember this summer, I kept posting about Tesla. I was just posting about it because the financials weren't making sense, but the growth was real. I'm like, oh my God, it's just growing astronomically every week. And I kept posting it, and people were like, oh man, I missed out. I really should have invested. But I always tell people, don't be so concerned about what you missed that you failed to see the opportunities in front of you. While I kept posting about Tesla, I was telling my readers about NIO. NIO is like the Tesla of China. And that stock was only $3. Now it's $43. And so just think about it. Anybody could have got in at got a full share of NIO, even though they couldn't get a full share of Tesla. They could have taken advantage of NIO. So you want to find those hidden gems. Hey, you can't get Tesla, so what? Is there any stock that's like Tesla that you can get? What other companies are out there that you can get? Don't always follow the crowd. If you can spot something before the crowd does, that's how you can profit over the long run. And that's what I love doing. So when I write for publications and when I post, I'm sharing stuff about stocks everybody knows about. But when I'm doing my research on my own and Dividend Investor, I'm reading about those gems. I'm looking for those gems that people haven't discovered yet because of some inconsistency in the market.
Now, how would an everyday person find those? Of course, sign up for your newsletter, but are they just kind of Googling? Are they using Morningstar? What are some ways for people to find something? Because oftentimes, like you said, last week it was big, like, oh, these IPOs, go buy this. But oftentimes people have the same things just based on what they're hearing. How did they go that kind of extra level of depth to find something outside of kind of what's popular and the talking heads are saying?
Yeah, so it's definitely a lot of research and putting all the pieces together. So that's why I say if you have too big of a portfolio, you may not be able to dive in and do like hours of research in one area because you're looking at 20, 30 different stocks. You're not going to be able to dive into all the competitors, look at all the trends. For me, I really look at trends. So the pandemic was taking place. Okay, we know these companies are going to probably rise because of remote technologies and stay at home. but what else is going on? What else can you follow? And can you connect all the dots? So I'm looking at Morningstar data right here. I'm looking at what analysts are saying. I'm looking at their competitors. I'm listening to the earnings call to see what this company is afraid of. Well, what other company has a competitive advantage in the marketplace that could fix what they are afraid of? So it's just about strategy. It's about, like, even when you're starting a business, you're thinking about, okay, what's needed in the market. Well, when you're an investor, you're thinking about, okay, who can provide what's needed in the market? So being able to connect those dots, know what's going on internationally. So I don't just focus on the US. I have to focus on, hey, this is good. This is going on in the US. Is there an opportunity internationally just like this? So you have to really be well-rounded in your resources, in your connections, in your conferences, in your research, and you have to constantly have these conversations. I'm constantly having conversations with people about, hey, I spotted this. And they're like, hey, I spotted this. And we put those two ideas together. That could be something. Let's do the research on that.
Now, you mentioned some of these international opportunities. So some of these are probably not traded on Dow Jones Exchange or the NASDAQ and so forth. And so if they're not traded there, where are people going in order to either invest, find, research, and so forth?
Yeah, so a lot of international opportunities, like they may be based in somewhere outside the US, but you can still buy them on a traditional stock exchange. So just because it's international, like NEO, it's a Chinese EV maker. You can buy that in your Robinhood, your Fidelity TV, all of your regular accounts. So you may be able to find international stocks on our exchange, which is awesome.
Now, are there any special tax treatments for some of these international stocks?
So with each one, like each one may have its own different thing. So I always read up on the industry or the sector, just like REITs, they have their own rules. So you want to research the rules of that type of industry. That's why I always say you want to know the industry, because once you get really well in the industry, you'll understand how to handle it. Like if you're looking at REITs and you don't understand how the tax structure works, like there's so much that goes into REITs that you really have to dive into. Like, yeah, you get higher dividends, but guess what? You pay higher taxes too. So that's another piece of the puzzle.
Twice as much in dividends to make it worthwhile.
And so you want to have a strategy for that. So for each piece of the puzzle, you want to have a strategy. Don't take anything standalone. Don't take anything face value. I'm here telling you, ooh, REITs are juicy. They're juicy on the income side, but don't just look at the income side. Think about the expense side. Ooh, it can be a headache on the expense side if you do this. But if you do this, it can be advantageous. So there are always two sides of the puzzle that you typically have to play.
This is good stuff. Keisha says this is great. She's learned a lot already. So thank you for that insight, Keisha.
That's awesome.
And then I know we only have about 5 more minutes left. So why don't you give us some kind of step-by-steps? Of course, buy the book. Hold the book up again so we can see it.
So this is basics. If you have no idea how dividends work and want to share with your daughter, this is really good.
And where can they get this?
This is on Amazon. Dividends Are a Queen's Best Friend, available on Amazon. It's available in print version and KDP.
Yes. So Amazon, hop on there tonight. I know some people were talking about they're doing some emotional shopping. So take that other thing out of your cart.
Yes.
And get something that can give you some dividend income. But can you give us some closing remarks, maybe some step 1, 2, and 3, some ways to get started? We're going to start 1, get the book. So give us our 2, 3, and 4.
2, 3, and 4. Okay, so get the book. Number 2, I always say, why not have the accounts? Just because you have the accounts doesn't mean you have to put anything in the account. I think it does something mentally when you have the account. So talk to somebody who can walk you through the step of getting an account. Sometimes it's as simple as putting your personal information in, social security information, and you can have the account in 5 or 10 minutes. But depending on the type of account it is, make sure you can talk to somebody. Have a diverse selection of accounts. When I talk about accounts, I always tell people, where are your tax-free accounts at? What are your taxable accounts? What are your tax-deferred accounts? And guess what? You can get dividends in all three of those accounts. So you can triple your dividends, which is amazing. Taxable, tax-deferred, and tax-free accounts. So you want to have a strategy. Don't just go and open that Acorns account or that Robinhood account because everybody else is doing it. I always like to have a foundation first. So if you qualify for the Roth IRA, if your income is under a certain amount and you qualify for the Roth IRA, research it and put that money in for the year. Put that $6,000 in because it's so many benefits beyond what I'm telling you here. So many benefits that the Roth IRA offers. So choose your account. Number 3, determine if you want to be hands-on or hands-off. So do you want individual stocks? Do you want ETFs? The index funds? What do you want in your portfolio? Guess what? You can have it all. Just determine and work with somebody to help you determine that asset allocation appropriate for you. And 4, if you want to invest in individual stocks and you have no idea where to get started, the dividend investor will help you build a dividend portfolio that allows you to fund your lifestyle. So it's helping you to create a 7-year plan to help you increase the amount of dividends that you receive for life.
I think that was great stuff. We got 2 people, Melba and Keisha, said they are buying the book now. So you'll see some book sales tonight. And hopefully, ladies, that means in 2021, or you can knock that book out over the weekend. And before the end of the year, you'll be dividend investing. And like Charlene said, 7-year plan. So all of us will be retired in 7 years, sitting around talking about how great this book was for us. And hopefully you're also purchasing the book for whoever it is in your life that is close to going away to college. So that 12 to 19, as they're planning and trying to make sure that they're not leaving college saddled with so much debt that they are then handcuffed to corporate America just to pay back those 4 years of school. So I don't see any other questions. Catherine said this was amazing. And thank you. Thank you, Catherine, for being here with us.
Thank you, Catherine. Get those dividends in December.
So then we can all sit back and collect our passive income. So oftentimes we talk about, can we save more? Can we spend less? But at the end of the day, one great thing is if you want to be able to make more while you're doing nothing or doing your 9 to 5 or preparing to make your exit, this is a great strategy to do it. And so I want to thank you so much for joining us tonight. And thank you so much for giving us these nuggets and these gems and just showing us that it is possible. So hopefully we'll all be walking away and we'll all be in a situation where we can sit back and just collect our dividend check every month.
Yes, dividends are our queen's best friend. Let's do this. Thank you, Rosalind, for having me. This was a pleasure.
Thank you so much. Thank you, everyone. Make sure you join us again next Monday at the same time. We have another great speaker. And so just like tonight, we learned about how to make some more money. And then next week, we're actually going to learn how to automate paying off some stuff that you have that's existing. So we can be passive on both ends in terms of making more money and then also eliminating some debt at the same time. So thank you again, Charlene, for joining us. Get the book and then make sure you share one with a friend. Have a great night.
Bye-bye.
Bye.